Welcome to the Market Recap. In today's episode, the International Monetary Fund say global economic growth is slowing, the banking crisis is not over yet, and the IRS's $80 billion spending plan. Kristalina Georgieva, head of the International Monetary Fund, IMF, has warned that the global economy is set to grow at roughly 3% over the next 5 years, which is the slowest pace since 1990. She expressed concern about the difficulty in cooperation to address the problems and called for more help for low-income countries. The IMF is expecting to receive a wave of requests for help or debt restructuring as the COVID-19 crisis, the war in Ukraine, and the soaring cost of living continue to reverberate. The weight of higher borrowing costs, after central banks raised interest rates sharply to stabilize soaring prices, is expected to cause roughly 90% of advanced economies to experience growth decline. For low-income countries, higher borrowing costs come at a time of weakening demand for their exports. Ms. Georgieva emphasized that authorities should continue to raise interest rates to fight inflation as long as financial pressures remain limited. According to the annual letter to shareholders from JP Morgan Chase CEO Jamie Dimon, the deposit crisis affecting the banking industry is still ongoing and may continue to affect the financial services sector for several years. While the bank runs that led to the collapse of Silicon Valley Bank and Signature Bank were less severe than the 2008 financial crisis, Dimon has called for stronger financial regulations to prevent undue panic in case of bank failures. To help address the crisis, JP Morgan Chase and 10 other Wall Street firms have deposited $30 billion into San Francisco's First Republic Bank to support it. Additionally, Swiss regulators facilitated UBS's purchase of Credit Suisse, which had been struggling with financial losses prior to the crisis. Dimon's letter also highlighted JP Morgan's investment in advanced artificial intelligence tools such as ChatGPT. The bank uses this technology for global payment processing. The Internal Revenue Service, IRS, has revealed its plans for the $80 billion cash injection it has received. The agency intends to use the funds to hire thousands of additional employees to audit wealthy individuals and large corporations. This increase in funding will allow the IRS to double its workforce, hiring about 87,000 new employees over the next decade. By the end of the fiscal year 2025, the agency plans to hire approximately 30,000 new employees, with 8,782 new hires in enforcement and 13,883 in taxpayer services. These new enforcement employees will focus exclusively on high-earning households, larger partnerships, and companies. The aim of this funding is to improve tax compliance among big corporations and wealthy Americans and to reduce the estimated $600 billion tax gap.
Thanks for watching and have a nice day. Hit like, subscribe and ring the bell for more content like this.